All right. Hey there. Welcome, everybody. Chris Franks with Texas West Capital. It is just after 11 a.m. Central Standard Time here on Friday, the 22nd of October, 2021, in a absolutely beautiful Bernie, Texas, guys. If you haven't been to the Hill Country in Texas, I definitely would suggest that you do it, man. It's a great place to be. A lot of really friendly people. A lot of German influence around here. Fredericksburg, Bernie, New Braunfels, stuff like that. That's a lot of fun. That's pretty cool. But anyway, yeah, beautiful area. Lots of water activities, lakes and rivers, and just a couple hours from the ocean here, from the Gulf of Mexico. So a lot to do, and yeah, I guess I'm, shilling the Texas Hill Country versus projects, right? You guys know I don't do that, right? I don't ever get on here and say, you know what, you should be buying so and so. Because, again, guys, cryptos are still just purely speculation. It may be moving. It may finally be moving into that area where maybe you can start looking at some fundamentals. I don't think they play a whole lot of addition to what you think about price right now. I think it's just beginning to get there. So after the next bear market, I think is really when we'll start seeing maybe more fundamentals kind of coming in and doing it. But yeah, you won't see me out here shilling anything. I'm not interested in trying to get you to lose your money. Anyway, who's all here already? We've got Crypto Mowgli, Claudio. What's going on, guys? Peter checking in. Boris is here. Hunter is here just in time. He says weekly bearish SFP possible on the CME. That's a lot of acronyms in there, right? Let's see who else we got. We got Bill is here. Bianca checking in. Telluride data. Spiral Architect Hank is here. He's probably still wishing he was beachside right now, surfing hotels, right? Hey there, Patrick. Good to see you. Andrew Bennett is here. Who else is here? King Crypto, what's up, man? Bill saying the Texas Hill Country is amazing, as is the YO Ranch Hotel in Kerrville, particularly the 8-foot stuffed grizzly in the reception area. If y'all don't know what he's talking about, Bill did some real estate stuff here a while back and was introduced to this whole area. And as you can tell, he seemed to like it a bit. So Bill is from the UK, and so if he likes it here, how could you not, right? Marty, good to see you. Wazobia is here. Jeff is here. Mark Chenard is here. Good to see you guys. Hank, you're planning a trip to Thailand as we speak, huh? Look at you, man. Always about the trips there. That's the way. Got to enjoy life, right? What good is making money, guys, if you're not enjoying it a bit? Guys, I'm telling you, you never know what tomorrow brings. I come from a line of very hard workers. My dad, man, that man, he was blue collar, worked his rear end off 6-7 days a week until just a few years back. And so he's in his 70s now. And so, again, really late into life. I've tended to do the same in my life as well, but I've had to remind myself that, work is not the end all be all. Every day, you're never given that guarantee that you're going to wake up tomorrow. And so it's important to kind of take some time, guys, for yourselves. Don't always put it off and go, well, I'm not going to, to do this today. I'll do it next week or whatever, because that becomes a habit in doing that. I know, I've been there. And I still struggle sometimes with that. But, make sure you take that time, guys. I don't know if you need to go on vacation as much as Hank does, but but do what you got to do, guys. Definitely enjoy some of your time there, right? Let me see here. Telluride says there are more tigers in Texas than there are in the wide world. In the whole wide world, you heard? I don't know about that, man. I don't know about tigers. We've got a lot of cats here, though. We've got, bobcats and, whatever else we've got around here. I don't know about tigers, though. Hey there, Mike Slane. Good to see you. Let's see. Oh, in captivity, you're saying. Oh, okay. I could believe that, probably. Tiger King facts. You guys are a mess. Let me see here. Bill says, remember when out shopping with your wife or partner, the only thing you control is how much they spend. And so credit card risk management is the key. All right. Hey, listen, guys. Really good to have y'all here. Man, I do enjoy this, what we get to do here, guys, all right? I enjoy getting to share a lot of what I know, and, but at the end of the day, I realize that, honestly, guys, and let's be real, most of y'all aren't going to really listen. You aren't going to really take it to heart. Trading is a game of discipline, and so the reality of it is most of us aren't prepared for that kind of discipline that it requires. And so, you'll kind of half-ass your way through it, and they go, oh, it doesn't work, and all these things. And it is what it is, guys. But I'm here to tell you it does work, and you can have an amazing life, as a trader. But you've got to be willing to do those things that you've got to do, okay, to do so. Now, some things here real quick, guys. In case you haven't heard, let me see here. I just finally got the link out there, guys. Let's go right here. Matter of fact, I'll just pull this over here for you. So right here on Twitter and Facebook and all these other properties we have, I released this right here. Here's a shot from right this morning, guys. Ignore my guitar collection in the back. But this is the PS5, and it comes with Madden 22 and Ghost. And that's what we're giving away next Friday. If you are a resident of the U.S., then you will get to choose if you want that, or if you want a 6-month Tier 3 membership. So that's, almost $900 of value right there for the membership. It's a little bit more than what the PS5 and everything is. But we had a lot of people say, man, it's great that you're doing this, but I really want the membership. So I decided to do that. Now, if you're outside the U.S., these systems won't work, unfortunately, for you. And so I had a lot of y'all asking me about that. So what I decided to do was, hey, listen, if you're a citizen out, of another country, then what we'll do is if you win, the PlayStation 5, instead of getting that, we'll give you the 6-month membership. So if you're a citizen of another country, not the U.S., and you win, you win the drawing for the PS5, then you'll get the 6-month membership instead. If you're a U.S. citizen and you win the PS5, you can choose if you want the PS5 or if you want the 6-month membership. Okay, guys? So that's what we're doing here. I'm going to use this new system here to do this. And this gives you guys this, a lot of people are complaining, oh, it was too difficult last time, whatever. So this way it'll give you a lot, you'll get to choose how you want to enter. It gives you a lot of opportunities to add more entries in there, by following us on different social media properties and whatnot. So I think it's overall a better thing for you guys to do it there. And these will reset every week after the drawing. We'll have a new one that we'll release. And so you can just go in there again and follow through the links. And if you're already following us or whatever, when you follow through the links, that'll be fine. But just make sure you do them. Don't say, oh, I'm already following on Twitter, so that next time I'm not going to click on the follow me on Twitter and get those extra entries. Definitely do it. Okay? So there we go. We've got all that. Man, this is going to be great stuff here, I think. We had 3 winners last week. Again, we're going to do 3 winners this week, so we're going to do one with that. The second winner is going to win the annual membership to Tier 3. It's about $1,500 or so. And by the way, this is discounted. Normally it's $200 a month, and if you buy a year up ahead, we give you a pretty big discount for that. So this is based on that. And then, of course, we're going to have one other drawing, so 3 drawings that day. The third one will get a 6-month Tier 3 membership with that as well. By the way, guys, you're going to have, I've changed it up. I've said, okay, we're going to have 7 days to get back to me. That way, if you guys are off and on social media a bit, you'll have some time. But I'm going to mention on our social media properties when we draw the winners, you'll have 7 days to get back to me. If you don't get back to me in those 7 days, you forfeit your prize there, okay? So make sure that you do it. It gives you a week. Okay? So we've got that now. We've got that. Let me see here. What else are we doing here? By the way, you can follow us if you don't have Twitter, guys. If you have Facebook or Instagram or something like that, we're on there as well, so you can get that. Let me just go ahead and I'll go ahead and copy this link for you guys right here, and I'll pop it in here so that way if you just want to go right from here, you can do it right in there. That's that. What else did I need to say? There was one other thing I think I needed to talk about real quick here before we went going. Oh, yeah. guess what, guys? I finally got around to getting that discount up there. So if you'd like to join us right now, you can join us. Tier 3. Let's see, we put this right in here. Boom. There's the code. There you go, guys. So you have to go to howtotradetowin.com. And then you click in, you go and purchase a Tier 3 and add in that code there. As you open the purchase window there, the checkout screen over here on the right side from the top there coming down, it'll say if you have a code, click this. So you click that, you type in your code, and then it'll give you that 50% off for Tier 3, guys. So jump in there and get that while you can. It's a very limited time we're going to do this, all right? But, hey, there you go. Like I said, I was going to give it for y'all, and I finally got everything together and was able to get it done. All right? Let me see here. Okay, so we've got all that. I think we've got all the house cleaning stuff to do here done there. You can join us, like I said, over here at howtotradetowin.com. That's where you'll get in. By the end of this weekend, I think we're finally going to have TexasWestCapital.com up and going. When we finally do, we'll give a little overlap with the two properties, and then we'll consolidate everything into TexasWestCapital.com. If you are already a member through us at howtotradetowin.com, don't worry about that. We'll be getting you guys migrated over there, and just it'll be pretty cool, man. A lot more stuff that we can do with that managed membership back end that we're going to use over there. So, always trying to make it better, guys. Always trying to make it better. Okay. All right. So let's jump on over here. Look at that, man. So what's going on with Bitcoin? Well, we've kind of been following this down. And so as I've discussed with Discord through this, since we made this high over here, a few days back, is that we're going to continue to look for potential, just a pullback here and then a breakout higher as long as it remains above wave 4 here at 58, 943 and 83 cents. Okay. Now, for right now, I've got this as an A, B, and then a 1, 2, 3, as a 3 and then 4 as a flat kind of correction here. And then I've got 5 down here, which has come pretty close. The one big thing we've been looking at since day one is this 1 hour pivot here, 4 hour pivot. So as long as we remain above that, we're cool. Things are good. If we drop below that, which should then take us, right here nearby that wave 4 swing low, then that might indicate we've got a more significant top in here. That doesn't mean reversal, guys. It just means larger pullback before larger rally, okay? There is absolutely nothing going on here right now that says that we need to be worried about that this is the top. I've seen people come over here quite a bit here and go, oh my gosh, it's a double top. Well, here's the problem. If it's a double top, then our pattern target, let me see if I can get over here to where the it is about this right here. That pattern target then will take us, I can't get in there, it's pretty close. First of all, if this was a double top, we wouldn't have it confirmed until it broke down below this swing low here, this 28.8. But here's the problem. If it is, and we kind of bring this target down here to the breakout area, we can see that that target carries below 0. That's an illegitimate target, guys. So this is not a double top right there. Again, if it was a double top, the target there is below 0. And so we look at it and go, nope, not a double top then. Okay? So stop listening to the nonsense. That doesn't mean it can't break down below 28.8. It just means that it's not going to do so as a double top. Okay? Now, I don't think it's going that way. As a matter of fact, right now, my bias continues to be that this will hold its support here and will continue up. But here's what has to happen. We have to get a break out of this descending channel resistance. That'll be the first clue. We do that, and that'll say, okay, maybe the bottom's in here. I've got this as wave circle 2 of wave Roman numeral 5, okay? So if we break out of this descending channel resistance, that gives us a pattern target of $3,975 based on the height of this channel. That's going to carry it, or that should carry it above wave B here, okay? This wave B is 66, 650, and 85 cents. If the count is correct, and we get this rally back up here and it breaks out above wave B there, then that should add confidence to the count. So basically what that means is, when we say that should add confidence to the count, that means that it is more likely correct than not correct. Significantly more likely correct than not correct. It doesn't guarantee that's correct. There are no guarantees in trading, guys. Trading is about finding support for your possibilities that that makes sense, right? And so if this is coming down here as an ABC, then breaking out above B says, okay, well, that's a 3-wave down. That's it and done, right? And we're heading up. In that case, I've got to change this target here a little bit, I think. In that case, from where we're at here, that would give us a minimum wave circle 3 right here of about 73,137 or so. Right around that R3 pivot on the 1 hour. So, I'd expect potentially a little bit of an overextension if it was to get up there and try and get at least that R3 pivot, okay? Now, the other possibility, obviously, if we're looking at this, I'm not a big fan because of the count in here, but maybe you could get a 1, 2, 3, 4, and a 5 here. In which case, it most likely, if this is 5 down, then 3 up most likely will not break out above wave B here. So what you're going to look for, if this is 5 down, is a 3-wave advance and then a breakdown below that second wave. Okay? So that locks it in as 3 up. And then that would be corrective, and that would say, okay, we're going down. Now, if we're going down there, breaking down through the pivot, generally we look for a target of the S1 pivot. So that's that 56,100 kind of area. But there is this nice high volume node here as well, right around 57,356. So those would be my 2 targets initially if we got a breakdown below this wave 4 swing low, which is right below that 1 hour, 4 hour pivot there. Right now, it looks good. Right now, it's doing all right. We've got here on the 1 hour, we dipped down into oversold on RSI and Stochh RSI. You can see the volume and price action here coming in. So as you come down with these 3 candles here, these 2 candles almost about the same. Volume's dropping off a bit. And now we've got this candle, which so far is completely reversed. We've got another 33.5 minutes left in it. But that volume's kicking up, and it looks like we're getting a nice demand wick here into this gray demand structure, almost to the EQ there. So, again, looks pretty decent at the moment here. If we can get a breakout above the descending channel EQ, the initial target's going to be the descending channel resistance. And then we break out of there. Then we look for this this pattern target here. But that's kind of what, I'm looking at the moment here. If we jump out here to the 4 hour Stochh RSI is oversold. RSI is not. But, it doesn't have to be. Especially if you're looking at getting a larger pullback if we move up there, right? Let's see here. Daily. Now, here's the thing. So, daily has this, I don't know, is that even a bearish engulfing? Let me see here. This one closed at 66.026. This opened up at 66.021. Okay, so it's a nice large supply candle there, but it's not engulfing. It actually gapped down, as you can see up here. Again, looking at the close and then looking at the open here. It started about $5 lower than where it closed. It opened about $5 lower. So it's technically not a bearish engulfing candle. But even if it were, what you would need to see is follow through today and or tomorrow to the downside. Otherwise, these engulfing, bullish engulfing or bearish engulfing at the end of trends are just pauses. They signal that they may potentially be reversing, but you need follow through the next day or two. If it's daily, or the next period or two, depending on if it's a 1 hour, 4 hour, whatever you're looking at. If it does not follow through, it's just a pause, guys, and a continuation higher. And right now we can see that this cluster right here is exactly where we're hitting. So a good chance we might rally up through here. Overall on the daily here, this is nice, strong movement. We come in basically sideways between the pivot and the R1, pull back a little bit here, all the way up through the R1, pull back all the way up through the R2, pull back, retest, up through the R3, pull back to this previous resistance area, this cluster here. And so this bullish structure here usually is going to send it up through the R5 pivot. So I'm not too overly concerned right now about any real, large moves down. Really, going down there to I don't know, 45, 40,000, anything like that. I don't think that's in the cards at all right now. right now the structure says that we're likely to see this continuing higher. But we have to see it still continue higher, guys. We could drop down a little bit more. There's a larger cluster here. So that, looking at those other targets I was talking about, could take us into that and then rally us up. So we'll see what happens if we can get that rally from where we're at here or not. Now what I'm looking at as far as targets on the way to kind of add some confidence or, along the way there as it's going up. The sooner you enter before hitting those confirmation levels, the more risk you're taking on. Which I'm not saying you need to or don't need to. I'm just making sure that you understand that, if you're getting in before this EQ, you're taking on more risk. If you're getting in before this breakout of this channel, you're taking on less risk than the EQ, but more risk up here. If you're getting in on a breakout above wave B here, that's the least amount of risk. Now, in that, it may still just do like one wave up, pull back, and then go. But we're talking about the overall structure here. If you're breaking out above that wave B, the pullback should remain above this swing low down here and continue up there. Okay? Let me kind of catch up with what you guys going on here. Kerouac, definitely exciting times, man. Good to see you checking in. Let me see here. Let me kind of catch up with you guys. Duff says to zero. Yeah, I know that would be something, right? I'm not saying it can't go to zero, guys. The one thing I don't want you to do is be so just emotionally bullish that you can't understand that there is still risk being in Bitcoin. A lot of new traders come in now and they take it for granted because Bitcoin has rallied for the last 11 years that it's just going to continue up. And of course the hope is that it does, but there is absolutely nothing out there guaranteeing that it will, guys. And if we end up in an economic downturn, especially if it becomes more of a depression than a recession, that increases the odds significantly that even if Bitcoin does survive, basically, I guess, it curtails a lot of, it may see a lot of, how do I say this? In the U.S. and in many countries, when your economy is dropping off, that's when you see a lot of legislation come in. And a lot of that legislation will keep you from doing things that you might otherwise do. And so they could, for instance, here in the U.S., they could come in and say, you know what? You need to be the same qualifications as are required to be in a hedge fund to dabble in cryptocurrencies. And that would effectively cut off most of U.S. participation, individual U.S. participation in cryptocurrencies. And other countries could do, the similar idea. So I don't want you guys thinking that it necessarily has to continue up forever. I don't foresee it dying off at the moment right now, but I would never be emotionally so bought into something that I can't see the possibilities of other things happening, because that's how you lose money, guys. I didn't get where I am today by being that way. Okay? You can't. You've got to be smart about it. That said, we still have a significant investment in Bitcoin and Ethereum and Litecoin and whatnot there from, back when we started. Back when I started in January of 2017. So, don't come thinking, oh, he's just this bearish guy spreading FUD or whatever, all this silly, stupid stuff that people online usually say. I have a significant investment in it, so I want it to continue to go up. But again, my want is not going to keep me from understanding the possibilities and how things may or may not act. So I'm going to continue to watch it, and I'll continue to share my thoughts with y'all. And that way, whether you agree or not with them, it's something to think about, right? It's something there. The worst thing you can do as a trader is always just go, oh no, every time somebody says something that you don't agree with, you go, stop with the FUD. That's the worst thing you can do as a trader. It just shows that you have no clue what you're doing. Okay? So, there are some very, some very well thought out, ideas about what's going on with Tether and whatnot and how that may or may not affect Bitcoin if things turn out to be true or not true. But anytime anybody mentions them, I notice that that the emotionally bullish, like, oh, stop with the FUD and whatever, and this has been disproven. But what they don't look at is, first of all, most of it hasn't been disproven. Second of all, there are oftentimes variations in what people are discussing, and what happens is people who are emotionally bullish about Bitcoin and are scared about potentially something happening negative with Tether, something significant happening, they just lump it all. They hear Tether and they go, oh, it's FUD. Don't do that, guys. You got to protect yourselves. You can't protect yourselves by having such a silly attitude, okay? It doesn't mean you have to agree with it. It doesn't mean that you have to think that that's what's going to happen. But as a trader or as an investor, you should always be thinking. You should never be taking anything for granted. You should always be considering the possibilities of what if I'm wrong? Because if you're wrong and you're already substantially positive with your profits, you want to make sure that you figure out how to, at what level it's going to take to say, okay, I'm wrong and I need to be out. So that way you can lock in those profits. The worst thing you can do is ride this thing for years and then, and have all this profit on paper and never actually take profit. That's the worst thing. Because if that thing comes back against you and it goes down and it continues to go down, it never actually gets back up to where you were. Man, you're out. I'm not saying that's what's going to happen here, but again, I feel like I've got to always, preface what I'm saying with these things. But I hope you guys, are much, much more thoughtful about this than what most people are online. I like to think that you are because you're showing up here. But if you find that you're lagging in that department, man, now, kick it in, get it together. Make sure that you're not setting yourself up to lose. Again, especially if you've already got some significant paper profit, okay? That's the worst thing that happens, guys. And it happens time and time again. All throughout history, with the stock market and other markets, new traders come in a bull run. Everybody's a genius in the bull run. They make all this money. They do well on paper, and then they lose it all and or more on the decline. I don't want you guys doing that, okay? Chris Baker, good morning, my friend. Good to see you here. Would I be willing to analyze OBV on like the daily or weekly? Pretty much a new indicator for me, and would be interested if you see anything interesting. OBV much lower than back in the first half of the year. Is this bearish divergence? Well, let me throw it on here and see what you're talking about. There we go. You're talking about on the weekly here or something. Let me get rid of all this other lines and stuff so we can kind of look here. On the weekly, new highs. So, most recently, new all-time high here, and OBV's following up with it. On the monthly, we're a bit down here at the moment. But, monthly's a much larger time frame, and this monthly hasn't even closed yet. So we'd have to wait and see how it plays out a little bit. Remember, guys, when you're using the longer time frames, you've got to give it a little bit of time to kind of feel itself out, to make itself to kind of play into the indicator, because the indicator is taking readings from a much longer period back. And so with Bitcoin, that means you have a much more significant, your periods are lower much more significantly than what they would be on a shorter time frame. So yeah, if you're looking at your monthly, yeah, it's on there, but first of all, the monthly hasn't closed. Second of all, again, you're reaching way back here. If we look right here at OBV, you can look right here. Let me see here. I don't know what I'm trying to tell you at the moment. But nonetheless, yeah, you want to make sure that, because, you can look right here. So in this area, you have a higher lows in price here, right? But right here, you have lower lows in OBV, and yet it still went up. Remember, OBV should be your forward indicator, not your lagging indicator, right? And so in this case, you would have normally expected it to come back down. But because this dip was so short-lived and then it continued up higher, it ended up continuing up higher there, right? So I think monthly maybe is, because of the how far it moves in such a short period of time on that particular time frame, I don't think the monthly is maybe the best. I think maybe you use the weekly, maybe you use the daily to look at there, and I think that'll give you a better kind of idea. As far as this goes here, we're just barely above it. But what we're looking at is this point here. I'm not really interested in this big, huge move here because you've got a whole bunch of peaks and valleys along the way, right? I'm much more interested in what's going on from the swing low to here. And in this case, OBV is supporting what's happening with price here. Higher highs, higher lows, higher highs, higher lows. So yeah, so if you're using OBV, that's what you really should be looking at. Again, now the weekly you can look back a little bit longer. In terms of actual time. But, so you can look back, from here to here. But even then, really, it's still really this kind of move right here is still the where you're really kind of looking at. But, you can actually look back here because it's not as, as many. The number of weeks is nowhere near as many as the number of days that went back there with that. So I hope that makes sense. But yeah, if you're looking at that's what I'd be looking at. Let's see here. This is the weekly, so we'll have to see how the weekly closes right here. Just because you've got this, if it were to close like this, a lot of people would be like, oh, it's definitely going down. It's not definitely going down. Bitcoin does that a lot. You've got this kind of doji here, and it went up a little bit further. You've got this right here, which was actually the top, and it went up back into it, and then it came down. You've got this one here along the way. So, again, you've got this one right here. It just kind of went sideways, and then it went up further. So the candlestick alone does not necessarily mean that a top is in. Remember, when it comes to candlesticks, guys, it's not just a one candle reversal or whatever. These things that people call reversal candles are pauses. And you need to see, following through in the next 1 to 2 periods. You need to see some good follow through on that reversal. If you don't, then most likely it's just a pause. You might get a slight little pullback locally, and then it'll continue higher. But again, a lot of times, and what I noticed when I first started trading was that people would talk, about all these reversal candles, and, it's not actually the way it is. They're not reversal candles, right? They're possible reversals. But until they're shown to be reversals, they're just pauses, okay? Now, locally here, we'll see. We'll see where this goes right here. Does this, does the bottom stick and it continue up, or does it continue a little bit lower down? If it continues a little bit lower, I'm still looking at this EQ here, right around that 90% retracement of 59,700. And just below it is that pivot. I'm still looking for a reversal off that area, but, again, guys, that's getting pretty close to the invalidation level here. So I would definitely look for some follow-through one way or the other before getting too excited about entering, if you haven't entered yet. That's just the way I would play this, just because of the possibilities in it. See here. Hey there, Oscar. Good to see you, man. He says, isn't old all-time high not holding mega bearish? No. Why would that be mega bearish? No. You guys are getting way too emotional about this. Let's just trade the charts and not worry about what other people say about how bearish it is or how bullish it is or whatever. All we've done right now is we've rallied up to that area. Now, in general, I talked to you guys about this quite a bit. In general, when you have this high, right, whether it's all-time high or just some interior high, oftentimes you'll get your initial subwave, your first subwave here, excuse me, that'll end a little bit before or a bit after of it. Now, sometimes it'll continue and slide out there, but most of the time it'll end right around this previous high. Okay? And then you'll get, that'd be wave 1, you'll get your wave 2 pullback, and your wave 3 will really kind of pop on out of there. This is the default. If it were to reverse off here, it isn't mega bearish because it didn't break through on the first try. More times than not, price does not necessarily break through and stay through on the first try. And especially when it comes to all-time highs, that's a significant area. That's where people expect to start shorting, right? Especially if they shorted from there to begin with and they hadn't actually closed out anything. And yes, that happens. And so again, usually you get the pullback and then the breakthrough. Sometimes it'll go a bit higher there. And then you get the breakdown back into it, and then you go. And other times, guys, it'll continue up. And then it just becomes support before continuing higher. Okay? So there is no, because it's stopped at the moment, means it's mega bearish. No. That isn't how it actually works. But, again, social media online will have you thinking that it does. Let me see here. Let me see. TV Canal says it looks like 1 to 5 down from the top. I did address that earlier, so definitely check it out if you missed that part. I'm just catching up to you guys, so you might have already seen that. Let me see here. Kevin K says you just have to smile when people hold through 29 to 66 and then panic when it drops to 60. Human beings, we're emotional creatures, guys. And that's not a good thing, obviously, for trading. It causes you to lose a lot of dang money, unfortunately. But, it is what it is. And so the best way you can work with that is, first of all, to understand proper risk management and then to actually use it, guys. I don't know how many people I've taught over the years risk management, proper risk management, and then they go on and they don't use it and they blow out their account. God, that's happened most of the time, guys. Believe it or not. I tell you, I'm not kidding. When I say to you, I'm up here and I talk to you guys about this, and I know that most of y'all won't follow through and do these things and take it seriously and take it to heart and all these things. This is something I know. Years and years of doing this, years and years of trying to help traders get to this point that I'm at, right? And one of the biggest things is getting them to actually follow through and do it. And so again, it comes back to that word discipline that I was talking about earlier. Most people in all areas of their life don't have much discipline. And if you don't have much discipline in other areas of your life, it makes it really difficult to have that discipline in trading. I keep telling you guys, however you view the world, however you are outside of the market is significantly how you're going to be in the market. That doesn't mean you can't change and do things differently, but you have to understand. Otherwise, you're just coming in and just throwing your money away and going, oh, well, Wall Street stole it from me, or whales stole it from me, or what. It's always somebody else's fault, right? You don't want that, guys. You don't want that, okay? You can do this. I'm telling you now, you can do this, but you've got to get that understanding in your head. You've got to, follow through and do those things most people don't want. Why do most diets not work? It's just not that the diet doesn't work. It's just that people don't have the discipline to continue following through with it. It always comes back to you. Not just in trading, but in life, guys. But people in general don't accept that. They refuse to accept that. They refuse to acknowledge that. And so the world is always against them. They're always, a victim. And I'm going to tell you what, guys, if you believe you're always a victim, that means you don't believe that you control your future. And if you do not believe you control your future, then why are you trading? Because whether you say you do or not, the reality of it is you don't really believe that you can affect your future, that you can do things to change it. You have to believe that. You have to believe that when you place a trade, that that you've got, that there is the likelihood that you could be, that you're going to be correct, that you're going to make money on, I guess is what I'm trying to say. You have to believe that inherently. Because if you don't, why put the money in there, guys? Why waste it? I'm going to tell you right now, I've told people this a lot of times. If you're not in it to listen to what I'm saying here and do these things, if you've got money, a little bit of money that you want to put in here, don't waste it in here. Go take a trip. A little bit more busy, a little bit more difficult to do with COVID these days, but do it. Take a trip. Create memories. Do something with that money that's going to have a positive net return for you. Don't just throw it in the market here, because myself and others like me, it's not that we hate you, but we're going to take advantage of that money. We're going to take it. If you stick out waving money in front of my face, I'm not going to not take it. You're in the market. You're doing a thing here. So you're a participant. But again, it all comes back to, it's up to you to do these things, guys, okay? Let me kind of catch up with you guys here. Hey, what's going on there, GT? Checking in from Washington State. I love it. Alan, you're very welcome for the discount code, man. Love to see you check in. And hey, guys, when you do, if you sign up with Texas West Capital, be sure that you verify your email address first. You'll get an email that'll get sent to you to verify. And by the way, if you've signed up for the giveaway as well, make sure that you verify your email. Do not forget to do that, okay? If you want a chance to win this stuff. I'm noticing a lot of people that are signing up for this giveaway haven't verified their email yet. Oh, okay. A lot of y'all came in now are saying, okay. But still a few of y'all out there that haven't. So make sure that you're doing that. But the second thing is when you join TWC, guys, log into your account on howtotradetowin.com. On the top left-hand side is a link that says update your Discord username. You have to click on that link and put in your username with the 4-digit descriptor, okay? You have to put that in there and click that. And that way the bot will sync up your account with Discord access. I wish there was some easy way to integrate all this, but there isn't. We had to get a bot program to do it, and so you have to manually put that in there to do that. Anytime you leave the server or somehow get kicked out of the server, if anything like that happens, make sure the first thing you do is go in there and put make sure your name is back in there, because you want to make sure that it's in there and saved, so that way the bot recognizes you and that you should be in there. By the way, guys, real quick here, I'm going to do this. Let me show you something here, just to help you out. Let's see. If you, let me see here. God dog it. So if you're new to Discord, you may not know what I'm talking about here, okay? Let's see. Where is it? Oh, right here. So right here at the bottom, okay? If you're in Discord, if you've got a Discord username, it'll be down here, right? And see how you hover over, it says click to copy username? Just click it. And then all you have to do is paste it into that box, all right? And so if you do that, that's as simple as it is. That'll get you your username and your 4-digit descriptor in there, okay? That'll be exactly what you need to do. If you have any issues with it, feel free to send a DM to myself or to Adam Harris on the server, and we'll help you make sure you guys get hooked up and get set up correctly, okay, with that. Sometimes there's bugs. It's all software. I remember a time, guys, when all what we're doing now, all this access to information, this global connectivity was said, oh, man, this is going to be great. It's going to shorten how much you have to work. It's going to help production so much. Instead, what it does is it makes us work a lot more, and not just with our regular work, but then having to deal with any kind of errors that happen with it. Good times, right? Amber Lee, what's up, man? Good to see you checking in. They're saying that risk management has changed their trading 1,000%. It's real. It is, guys. It is. I know a lot of times you come in here and you do this thing where you're looking for, some kind of holy grail way of reading the chart that's going to make you successful all the time, right? And the real secret to successful trading, the one part of it is risk management. Period. If you refuse to employ proper risk management, you're not going to be trading for long. Or if you're going to continue trading, it's going to be because you continue to add money to it. The other part, of course, is continuing to take profits consistently. You have a lot of people that talk about how much money they're making on paper. Those same people don't mention a whole bunch about how much they're losing on paper when the market turns down and they don't get out, because they're scared that it's, the Bitcoin has utilized this term diamond hands, right? And they kind of use this as a badge of respect, right? Oh man, I've got diamond hands. No, what that means is you were a fool and didn't get out when you should have. I'm going to be honest with you guys. I'm not here to blow smoke up your rear ends. I always tell you that. I'm here to be dead honest with you. All that means is you were scared. You didn't know to take profit when you did, and you got stuck holding the bag. And then you didn't sell when you were holding the bag. But what kind of greatness is that, right? If you didn't take it at the top, and you would have liked to have, and you're just holding as it drops down 90% or something. What good is that? Now, if you're an investor, and you've gotten in and you have some long-term timeline on there, whatever, okay, that's fine. But that's not diamond hands either. That's just part of what you're doing. There's nothing special about it. You're an investor. You have a longer time frame, higher target. It didn't go past your stop loss, which if you're an investor, you should have a stop loss, guys. It doesn't mean don't have a stop loss. It doesn't mean go to zero. There's no reason. If you're investing for the long term and you're going up for a few years, there's absolutely no reason you should be taking a loss. Okay? But nonetheless, so if you get out there, again, if you're an investor longer term, you've got longer term targets, you expect, especially with Bitcoin, the large drawdowns, doesn't hit your stop loss. It's not diamond hands. You're not doing anything special. You're just investing. If you're a trader and you don't sell at or around the top there or in profit or whatever, and you ride that thing down 80 or 90% and you're forced to hold because of that, it's not diamond hands. It's just that you weren't smart enough to get out when you should have. And now you're trying to make up excuses. Again, guys, I say this not because I'm trying to be disrespectful or rude. I say this because you have to recognize this. If you want to be a successful trader, you have to understand when you're lying to yourself. So you can stop lying to yourself. So you can start taking charge. You cannot be an investor and allow things to happen to you, or a trader and allow things to happen to you, because net result at the end is going to be a loss. If you're coming in as a trader investor, you have to believe that you can affect your future, and that's why you're doing it. Everything else, you don't really believe you can, and when you don't, because you're not doing things you need to, you're going to blame it on everybody else. You're always going to be a victim, and that's not going to get you anywhere in life, guys, okay? All right. Yeah, Alan, yeah, man. The software that we have back there right now, unfortunately, it forces you to put something in that secondary box. So if you don't have an apartment or a condo number or something like that, you have to put NA, or you can put anything in there. It just has to have something in there. Yeah, so sorry about that. Crazy thing that happens there. But with this new system we're going to here with TexasWestCapital.com, that will be migrating you guys over there too. There won't be all these issues like that. Well, that kind of issue won't be an issue. So yeah. You think that Diamond Hands comes from the Ape AMC or GME community? It's been around a long time. I think it's been around a lot longer than that. But, guys, I want you to spend more time focusing on trading and not all this silly nonsense that goes on social media. Everybody wants to feel like they're part of a group or part of something. And it's especially because, when you're trading can be such a lonely thing to do. It's only you. It's not you and some group of people. It's you. So, that's why I really like the community that we have at TWC. People have been there for so long. Many of them have been there for so long, years and years and years. And so they create this great base that is really helpful and kind and courteous and whatnot to new traders. And, I think that's the kind of community that if you're a trader, you need to belong to, not to the social media stuff. Again, the idea is to do what you can do for you, not for, not to just be part of a group, right? Yeah. Do I see the bull run going into Q1 or Q2? That's a good question, Andrew. So this is the way I approach this, guys, okay? Pay attention here. So I look at this and I go, okay, historically, let me kind of get rid of all this here. I guess I'll go to the weekly. So historically, and this probably isn't even the best chart right here because it's not let me see if I can do here the BLX. Let's do the BLX here, okay? Just because it's got that larger thing that I can show you here. Let's take the Donchian channels off. Okay. So, log, there we go. So here's the way I look at this, okay? Now, during the previous ends to the bull runs, they ran up into the end of the year here, right? Well, these I guess we look at these two recent ones here, right? These two big moves here. They ran into the Q4. So my default thought is that this is going to run up through Q4 and potentially be done. Now, I'm open to it going on into potentially Q2 of next year. And, we can look at other previous times when that's happened. Depending on how you want to count this here, you've either got it here, which is through May of 11, or you had it here through April 13, okay? And so in those, you ran up into Q2. So that's still a possibility as well, okay? But here's my thought process. If you take the default that it's going into Q2, then no matter what happens prior to that, how this turns out or whatever, you're going to have a very difficult time emotionally changing your thought because you've already figured out how high it's going to go during that time. You've already spent that money, thought about how great it's going to feel, how your friends are going to envy you, how you're going to be able to buy that island or that Lambo or whatever it is you guys want to buy, right? Emotion is a killer. It's going to be difficult to deal with it. Now, if you take the idea that it's going to end here potentially in Q4 by the end of this year, but with the possibility it might continue into Q2 of next year, well, now it's not as emotionally set for you now because you're saying, listen, it might end this year, but we could see some real rally and takeoff and going on. So now you're more prepared. So if it does top out there and starts pulling back, whatever, you're already emotionally prepared for it. If you're thinking just Q2, you're not emotionally prepared for it at all. And so you think it's just going to pull back. It's just going to pull back. And it keeps pulling back deeper and deeper. Oh, it's just going to pull back. It's going to continue on higher. And you miss the opportunity to take your profits. So it's all about kind of faking your emotions there. Kind of dealing with your own emotions, faking it out, basically. Right? So you want to make sure that you can do what you can do until you can actively manage those emotions. And it's a skill, guys. It is a skill to actively manage your emotions. It truly is. A skill that, most people don't have. And because it takes work, it takes effort, it takes time, it takes discipline. Okay? So that's how I would look at it there, okay? Let me see here. Asum Risk says it makes sense that the market front runs and prices this in. Yeah, so we'll continue to see how it goes here. Again, the idea that this, we talked recently about the idea that maybe this is an ABC going up here. The fact that it broke out above the all-time high says it is not, unless this is somehow an ABC here, and I don't see how we count that here. There's two areas. The first area is right here that makes it difficult. The second area is this. I mean, this looks like a pretty clear, again, 5 count down. And so if this is going to be an A down and a B is some kind of flat here, this has to be an ABC coming down in order for B to rise above it. If this is 5 down, B cannot rise above it. That would invalidate it as 5 down. So, again, the odds are that this is the start of a new rally up here. This is 4 and we're heading up. This is just the beginning of 5, basically. Okay. Now, here's the other thought. I've talked about, possible targets and whatnot. And, we looked at, okay, if this is a 1-2 here, then wave 3 has a minimum target of 77,000, 77,900 or so. That gives us a minimum wave 5 at 85,000 and some change. If you want to get beyond that, price necessarily is going to have to the waves are going to have to subdivide. Okay? So what that means is, if you were around in 2017 here, you will have remembered that it was subdividing a lot along this way here. And it kept throwing people off because they would get out and price would continue higher without them. And it made people very scared here to kind of try to trade in and out. And a lot of people lost a lot of money doing it, right? So you've got to be careful with that coming here. If you want to get 180,000, 260, 320, whatever you think those targets are, price is going to have to these waves are going to have to subdivide, which means you have to zoom out a bit. Don't trade the very short term. Come out a bit. Come out to the daily or something and trade those larger waves. It's going to give you a little bit more room, but that's because, again, of that subdividing. If you're trading the short time frame, the 1 hour, whatever, you can get caught. As it does because of those subdivisions. Okay? So that's definitely something to keep in mind with this as we continue to go up here. Let's see here. Oh, let me kind of catch up here. Oh, Asim Risk, you were following on Hank's comment. Oh, okay, I got you. Mike Slane says, did you hear about the flash crash on Monday morning around 7:30 a.m. when Bitcoin fell to 8,000 on Binance? Any thoughts? How did that happen? Yeah, that was Binance US. And so if we go here and we go, okay, I'll show you exactly what Mr. Slane here is talking about. Binance US. There we go. He's talking about that right there. According to Binance, this only happened right here on Binance US. Supposedly it was an institutional client who screwed up, who had a glitch in their software that sold. I don't know, that's what Binance was saying from what I could find. I wouldn't worry about this. The fact that it only happened on Binance US means it's nothing really to worry about. Was it just a glitch in Binance US's system, or was it, as they said, some institutional investors' software, glitching? Either way, it was just right there. It wasn't anywhere else. So I would not worry about it a whole lot. Okay. Let me see here. Telluride says, what are you saying here? Very, very different volume liquidity, and an algo ran amok selling for an institutional customer was the story I heard. Yeah, that's the same thing I was really hearing too. Yeah. So, interesting how that works. What I imagine Binance US would do here is compensate anybody in this area here. I would think that they might end up doing that, because they would have a lot of angry traders, people that wouldn't use their platform anymore if they got taken out here on this nonsense, because that would end up being, again, a liquidity issue on the exchange itself. Makes it not a safe place to trade, makes people want to take their money elsewhere, and Binance US doesn't want that to happen. So I don't know. I don't know what they're going to do or what they did or anything, but I would think that if it liquidated traders along the way here, they would find a way to make good on that, because you don't want your traders unhappy and leaving, and your investors leaving, taking their money from your exchange, right? Binance US already has enough issues on its own there. Okay. Excuse me. Hank says it's not just US. It's not just Binance US. He says it was on all USD pairs, on all USD exchanges. Except it didn't happen on... you say that, Hank, but it didn't happen here on Coinbase. This is Bitcoin US dollar right here. It didn't happen there. So it didn't happen on all USD exchanges. Again, it could have been their same algo running with multiple different positions as well. But yeah. But it didn't happen here on Bitcoin USD on Coinbase. And that's a USD. It didn't happen on Kraken, another USD. Bitcoin USD over there. Yeah. Yes, I get that, Hank. You said the information is incorrect because it happened on all USD pairs on all exchanges. You said it was on all USD pairs on all USD exchanges, and that's incorrect. That is not correct. I'm showing you right here. First one, it wasn't. It may have happened on ADA USD, sure, but maybe that was part of their whole thing, and maybe if they're institutional, they probably got multiple exchanges with different positions. And so if it ran amok, it could have ran amok and did it across them. Who knows? Gemini, Telluride saying, was unaffected as well, which is another USD exchange. So, again, I don't know. I don't know what happened. I just know that it wasn't consistent across all exchanges or even a lot of exchanges. For me, it's a non-event. As we look at this. Okay? XRP Bandit says it didn't happen on Bytrue either. Or Bitrue. I don't know how to pronounce that. DXY guys here, look at this. So, couple of possibilities here. I'm looking at maybe the fact that we've got like a 1, 2, 3, 4, and a 5 playing out here. Now this 4 as a triangle would be pretty large comparative to the wave 2 here. But I'm giving it some room to possibly do it. We got a wick, a very little bit of wick into very little bit of wick. So, there is that that caveat to the rules. Again, normally wave 1 cannot, or wave 4 cannot enter into wave 1. Unless it's an ending or a leading diagonal. But the other caveat to that is in highly leveraged trades, pairs or whatever, it may, just due to the leverage that's in there. I haven't checked this on DXY on the futures market for that yet to see if it's there as well. But you could also potentially look at this as a 1, 2, 3, 4, 5 here, and so this is 1, 2, and then this is 1, 2, 3, 4, 5. So you get a 1, 2, 3, 4 here. But even if it was, here's the other thing. Because it's a triangle, it doesn't matter that wave A of the triangle breaks into wave 1. All you're interested in is where does the triangle terminate. That's what you're interested in. So, these are things that, again, most people don't really actually even know about if they're trying to use Elliott wave, right? So here's the big thing. If we've got a possible A, B, C, D, and an E going up here, then this should be the top. And we should break down below here. And in that case, based on the height of the triangle, that would give us a target down here of around 93.394. Now, if we break up above this right here, remember this is going to be A, B, C. So if we break out above 93.79, that invalidates this particular triangle. Okay? That doesn't mean you can't maybe have an A, B, C here, and so you get an A, B, C coming up here. But this is the first step, the 93.79. If it then continues to break out above the swing high here at 93.879, that will invalidate all the possible triangles here. And it'll say that wave C of 4 is done right down here at the 93.496 area. Okay? So that's what we're kind of looking at. Overall I'm looking, does it break out above the swing high or break down below the swing low? That's what I'm kind of looking at here. And then obviously if we break up through that, of course, that has this descending channel. I've got it in here pretty poorly, but basically this descending channel here, the resistance target, pattern target is 0.65 above the point of breakout. So we'd be looking for it to head up there to around 94.34. So yeah, and that would take it above what we believe is wave B here at 94.171. Adds confidence to the count, again, and then we're looking up here at around 95.13 as kind of that target area. So yeah. Politically, if the large dollar bills in Congress fail, would that accelerate a recession in the U.S.? So, Brian, you're asking if Congress doesn't spend a whole lot of money, doesn't pass all this spending, will that accelerate a recession? I think it's what you're asking, right? It depends on how that money's deployed. It's kind of like with the Fed's printing, right? So the Fed goes in there and they print this money, but it doesn't actually make it out here. They print this money, right? Most of it stays in their reserve vault, which is you can't touch it. Nobody can touch it. And so that money doesn't actually make it out into the wider economy. The only way it does, remember, this is what I talk about. The only way it does is if banks make loans. Those loans are how that money makes it from where the Fed's printing out into the wider economy. Because that money sits in the Fed's vault, and those banks are able to reference that as their reserves so that they can make these loans. Remember, there are laws that say a bank can only, print out, can only make so much in loans. They have to have so much in reserves. So this is a way of finagling around that, where the Fed says, okay, here's all this money here. You can reference this and say, look, you've got the reserves to make the loans. Now go make those loans. Because then that brings that money from where it's sitting. You can print all the money in the world you want, guys, but if it sits there and it doesn't actually make itself out into, make its way into circulation, it has no net effect on the inflation. It can't possibly. It's sitting there. It's not going anywhere. It's not. Remember, the idea of inflationary money is that there is more money out there to buy things with, right? So you have more money competing for the same things, causing prices to rise, right? So if the money is printed and sits in the vault, again, it's legally cannot be touched by anybody, right? There is no way that causes inflation. Because it sits there. It doesn't go anywhere. Okay? Doesn't matter that it was printed. I could print inks dollars all day long and sit on them. They're not really worth anything anyway. But I mean, it's that same idea. You sit on them as long as they aren't circulating. There's no inflation, aspect. There is no inflation causes rising prices aspect to it. Now, some of that money does make its way out to primary dealers and banks and whatever. But this stays there. This just goes into the markets and the treasuries. The problem with this is this money sits over here, and if that money doesn't have anywhere to go, it means they're feeling that in that area, and that short-term interest rate gets a lot of downward pressure, which is why the Fed has to open the reverse repo facilities to sop it up, so that it hits they create a solid floor for interest rates, short-term. As I've told you before, as I explained, I think in one of the market breakdown issues that I sent out a few weeks back, if they don't do that, then all that excessive cash causes short-term interest rates to go below zero, which causes a whole bunch of havoc everywhere else, right? So they do that. Now, that doesn't actually fix the problem. It's just a temporary solution. It doesn't get fixed until, again, the banks start loaning this money out. Now, in order for the banks to loan the money out, they have to decide to do it. So if they're concerned about, the broader economy and not getting paid back and stuff like that, they're going to tighten that. We know that they've been tightening their lending standards over the last few years, right? Two is people and companies and whatever have to actually want to take out loans. You can't force somebody to take out a loan, right? So even if banks want to do it, if the demand is not there for it, you're still not going to get the loans. So banks have to be willing to loan out and easier, and people have to be willing to take out those loans in order to bring that monetary inflation out into the broader economy. How many of y'all know that? Because I still see people talk, and some of these are very rich people saying, oh, all this Fed here, oh, it's all this inflation, we're going to hyperinflation, all this other stupid stuff. I don't mean to be disrespectful about it, but really, it's silliness. Just because, and you guys, you tend to follow these people online because they've got successful businesses. History is wrought full of people who have been successful in business and had no clue what they were doing in the markets. Wyckoff talked about it. He discussed this very thing 100 plus years ago in his book, Studies in Tape Reading. He talks about when he's working at one of the brokers or whatever, how he would find out these people would have a lot of money. They have no clue what they're doing. They were successful in business, but were terrible in trading and investing. One does not beget the other. You guys need to understand that. Stop listening to people who have successful businesses telling you how you need to trade or invest in the stock market. They have no clue. Most of them. Okay? All right. What's the failure point on the system that will finally blow the Band-Aids off? Well, again, guys, in my latest issue there, the market breakdown, I pulled out a screenshot of a video that EWI had of a chart which shows the margin and relative to the stock, relative to the market, right, relative to the S&P. And it shows some indicators that we generally watch, which have to do with margin. And what that margin says is basically the market is coming to this point where there really isn't any margin left for them to add money to their positions. And I think this is just the kind of, I don't think there's any one thing that happens. I think if what I believe is happening is going on, it's this culmination of things. But really, it just comes to this whole idea that the credit bubble is done. It can't expand any further. People are unwilling to do it or unable to do it. They've extended beyond extending. Again, this type of thing kind of shows up in those margin accounts that people have for for trading and investing. And I think when price starts popping the other way, and they have to get, if it does, you get a hard push down, people are going to have to run and cover and or get liquidated. And I think, we're at such a precipice right now that I think that if that happens, there's a good chance that that's what's going to be that you're going to see it just kind of cascade down. Because I don't think there's any one particular thing that does it. I think if it's going to happen, it's been a culmination of events that have been happening, that have just kind of put you to the extent of this whole credit thing. And I think it's kind of where we get that. Do I think the housing thing that's going on in China will affect the dollar? I think that's I talked about this again in another one of the market breakdown issues, guys. Make sure you guys sign up for that. You can get it there at my Twitter profile. Yeah, so I think Evergrande is more local, okay? It's local to China. Now, I think that there is a chance maybe that the results of that kind of billow out and start affecting larger swaths of China, and then that may affect the overall global economy as China tries to deal with it. But I don't think like Evergrande or the housing market itself directly affects the rest of the world, the rest of the U.S. dollar, or anything like that. I think there's potential effect as a result of that, just overall in what China does around the world, because of what's going on with the housing that's over there with, Evergrande's this big, huge part of it, right? I think, it affects foreign investors through those foreign bonds, right, which are dollar denominated. And so if Evergrande's not making their payments, then those investors are losing their money, period, end of sentence. And so that's going to then lead into the other housing stuff, whatever, which may lead to then, a cascading effect there, and other bondholders in U.S. dollars don't get paid. But that's localized to them, I think. I don't think that itself has a huge impact on the U.S. and the dollar and whatever. But I think that kind of thing happening with China is going to have a bad effect for China, which could, then turn on the entire global economy. But I think that just it bodes well for the U.S. The EU is still fighting to come out of the pandemic. So the U.S. is well ahead of the EU with the whole pandemic thing. Now, what is her name over there? Lagarde in the EU talking about, you're just taking a really soft approach to this, saying, we're really going to have to kind of see what's going on here before we really even talk about taper. We may cut back on what we're doing. We're going to cut back on the way we're doing this one thing, but then we're going to ramp up the way we're doing this other thing. So there's no real tapering going on. What'd she say? This lady doesn't taper or something like that in regards to, playing off of what Merkel said back in the day. So, when you talk about the dollar, what you're talking about really is the euro, right? And so if the euro is having trouble because it makes up about 58% of the DXY, of that weighted value there, it means that the dollar should do well. Now, speaking of that, if we want to check out the euro here, look at that. This is the weekly chart on the euro. Drop down through impulsively, large volume, large candle spread, through the weekly pivot. Potential kind of head and shoulders looking thing here. I don't like the breakout above it and coming back down, but nonetheless, it was held in check by that swing high there. Has continued down lower. We're below this large high volume node here. We'll get this other one a little bit larger coming up here. But this looks like we're heading down further. If this is a valid head and shoulders, this gives us a Euro USD target. I know Hank hates this. Hank's going to hate this. Wait for his comments. But if we're looking on the breakdown through here, it looks S1 pivot. That's where we would normally expect it to go. You break down through the pivot, you look for the S1, the next one, right? But that, you're getting down there. at 111 on the euro. So, you know, and it doesn't have to get down there. No. You know, I don't know. If you look here, maybe you've got a 1, 2, and then a 1, 2, 3, 4. Maybe a 5 is an in diagonal, so 1, 2, 3, 4, and then 5 here, and then you get an A and a B, and you're working on C here. So, you know, maybe it doesn't get down there. Maybe it only gets here 135 or 133 or something like that. But, you know, overall it says that it's likely still headed lower here, right? But yeah. So, I mean, you know, again, guys, I nor anybody else can guarantee you what's going to happen. We can just look kind of things at how they're going here. And if you're looking at the dollar and what things might have impact on the dollar, you know, other than just, you know, you can look at the charts here and go, okay, well, this doesn't guarantee that it has to come down or that it can't rally from here. You know, it just suggests that it should probably head down lower. And again, if you look at it in terms of the DXY, the value, you know, the dollar there, it makes up most of, you know, more than half of that value. The next largest one is the Japanese yen at like around 12% or so. And beyond that, the rest of them are much smaller percentages. So what the euro does, you know, affects the dollar oppositely, right? Oppositely. I don't know if it's even a real word there. But to the opposite way. And so you can look at that. But if you want to look at other things, you know, again, you can look at how inflation and whatnot is ramped up in the U.S. versus what it has in the in the EU. You can look at the central bank stances. You've got the central bank over here, the Fed, you know, talking constantly about tapering. You've got the EU over there saying, well, not so yet. We want to keep supporting because we're not sure that this is done yet. And so, you know, again, so the Fed and the U.S. start looking very positive toward slowing down the money spigot, basically, which should lead then to rising interest rates, and that's the reasoning. Whereas the EU is further behind in that. So I think if you're looking at the dollar, I think, you know, whether you look at it fundamentally like that or through the charts like this, I think either way, you know, it kind of says, well, this is potentially what's up there. Yeah. XRP, you're welcome, man. You're welcome. Sure thing. Do I see a rising wedge on the DXY in the daily starting around March 2021? Weekly too, maybe? So again, we're looking here with the Euro USD, right? Let's go daily here. Let's see. So again, it's this idea that this is a... so if we look right here at this, right? We've got this here as potentially this inverted head or this head and shoulders here. So this, you know, it comes out just a bit differently. Let me go ahead and throw the, let me see, do I have it here? We can compare the euro on here. There we go. Boom. That's what I'm looking for. And so if we look at this, logarithmic we got on there. Okay. So again, we're looking at this difference here, right? So the other odd, what you're saying there is that we would have a descending wedge here on the euro, which gives you this ascending wedge on the dollar. Definitely a possibility. Sure. Yeah, there's definitely a possibility there. No guarantees either way. So, yeah, you know, if we look at it, let me kind of pull back to the euro here. And so you're saying this kind of thing right here. Now in that, we've got this banging up over here, right? So if we look at this, let me see here. Let me kind of just pull this over a bit. All right, so we got a little bit lower there. So what you would have to see is maybe we've got a 1, 2, 3, 4, and 5. Now you have to make sure this can either be 5 down, 5 down, 5 down, or it has to be 3 down, 3 down, 3 down. So it gives you possibilities on that. My biggest concern at the moment is that it did drop through the pivot. Now, again, this is coming from somebody who, for a few years there, all I traded was pivots, right? And so what I look for on something like this is we came in sideways between the pivot and the R1. And then we dropped down and we found support. And we thought, okay, maybe that's going to be good, but it never broke back out above. Instead, it weakened, and now it's dropped through the pivot on a spike of volume and larger candle spread. This tells me that locally, this is potentially quite weak right here. Everything else aside, forget Elliott wave, everything else. Just looking at structure in terms of pivots, this is what this kind of says to me. Now, if this is, okay, so if this is going to be a leading diagonal, right? Or a diagonal of some sort, right? It would have to be leading. If it's going to be a diagonal, it has to be leading, right? It can't be in any diagonal because it's just the start off this possible macro low here in January, right? And so that would mean this has to be a leading diagonal. And all that means is you're going to get a rally and then a rejection and send it back down again. And in that case, I could see this rallying up here, most likely to this kind of high volume node here, 118, if it were to do that. That's this whole area right here. This whole area right here. And get rejected there and then head down. And so at least it would have to be a leading diagonal as an A, and then you get a B, and you still have to have a C coming after that. Or it's a 1 as a leading diagonal, 2, 3, 4, 5 come down, much larger correction coming on it. Yeah. So again, when you look at it, I think that's kind of what you have to look at there. Now, could this maybe be an A, a B, and a C? So again, this would have to be 5 down here, because I don't think this rallies 90%. Maybe it does. No, it's just 85.4%. It doesn't hit 90%. So this can't be an A, a B, and a C as a flat. So this has to be 5 down. I'm not sure it is, but that's what we'd be looking for. This would have to be 3 up, maybe. Maybe A, B, and then C here. I mean, it's got to be 3 up either way, right? And then this has to be 5 down. Now, here's the thing. If this is, if this is going to be an A and a B and a C as a zigzag, then if this is 5 down, it can't. If it's a leading diagonal, this can't be an ending diagonal. If you can get 5 down here without overlapping, without being a diagonal, then this could be an ending diagonal here. Get overlapping. But if it's an ending diagonal, then 1, 2, 3, 4, and 5 all have to be ABCs. They can't be 5, 3, 5, 3, 5 interior wave structure. It's got to be 3, 3, 3, 3, 3. Because an ending diagonal has to be all 3s. So yeah, a lot of stuff I'm going over here, and if you're not fluent in Elliott wave, you might have to go, what? Feel free to rewind this back at some point and read over that and take notes, and then look as you're doing it. But these are the requirements that would have to be if you're going to look at it that way. If it's going to be an ABC or or whatnot, there, you're going to have to follow through with these kind of rules to make sure that it is or isn't. And so we've got a lot of overlap here. And even this right here pushing up into it. So, to me, it would say that maybe this would have to be an ending diagonal. So this right here is going to have to not be a leading diagonal here. In that case, maybe we have a 1 with a flat correction for a 2. And then a 3 and a 4 and a 5. I could see that. And that gives us that. But either way, this should still have further to go down. Because this looks like it would be a 1, 2, 3, 4. Even if it has a little bit further up, still a 4 and then a 5 further down to finish that ending diagonal. So what all that means, of course, is that overall, dollar should then be rallying up there. Now, like the euro here on the daily has just rallied up here in 3 waves. A, B, C, right? Finding rejection at the pivot, topped out and overbought, curled down. This all signals that I would be expecting to see this coming down lower, a new low. Again, it's only in 3 waves. So all you want to do right now, if you want to know for sure, at least locally, what's going to happen here, this looks like an ABC up. So if price drops below this swing low right here at 1.15718, that should say that you're going to get a lower low below this swing low. Because this is an A, B, C. And so dropping below wave B here, Means that wave C can't subdivide any further, and that's done, right? We should look down lower. To the same side of that, to the opposite side of that, right here. And so we've got possibly an ABC here, finding support on the pivot. Stochh RSI bottomed out and oversold, crossed bullishly, and is now curled up. And so if we break out above this swing high right here at 94.171, that says this is 1, 2, 3 waves down. Now we'd have to go up. So yeah. Now, let me see here. So yeah, that's what I'm kind of looking at right there now. Let me see here. Andrew, you're welcome, of course. GT wants to know, is Elliott wave pretty helpful, as good as Wyckoff or FIB? I don't know if you're trying to say fibs there. You know, I think it's all helpful. I think it really is. Elliott wave does well because it helps you understand the trend and potential targets as the trend matures, right? Wyckoff is more about understanding whether price is likely to reverse or not at those points where you're getting pauses, right? So with Wyckoff, you're looking at these ranges here and what's potentially going to happen. Elliott wave gives you an idea of how far you're looking to extend when it does, you know? So you can think of Wyckoff as helping you understand your corrections on your rallies or your declines there, the corrections, when the price goes in the other direction, where everybody loses their money. Everybody does great making money in the larger trend, but then they try to play those pullbacks and they usually end up losing it all or most of it or all of it and more. Okay? As far as the FATF goes, he says task force is generally not that effective. I would argue that the FATF is very effective because the U.S. Throws its weight around so much in the world's economies. And so what gets past the scary part about the FATF, you know, and its draconian kind of measures with Bitcoin and other cryptocurrencies, is that they can tie it to whatever economically the U.S. or militarily is supporting that other country. Basically, the U.S. says, listen, either you abide by this or we take away. And for most countries, they can't afford that. Most countries cannot afford that. And again, this isn't oh, hey, U.S. is better than anybody else. This is the reality of the situation. You know, most countries cannot afford, and especially to immediately all of a sudden have to exponentially increase their security forces, their nationwide security forces, right? Or support their economies. You know, and so, you know, if they don't agree to it, the U.S. pulls back on what they're helping them with, and that has a negative effect on them. Their people are unhappy. Their people are hurting. So, yeah, you know, normally I would agree with Hank, but in this case, that particular agency, that task force, whatever you want to call it, yeah, they wield a lot of weight across the globe because they have the whole of what the U.S. is doing with everybody, how they're interconnected into those countries' global, or into those countries' economies and whatnot, and their security and all that. So yeah. So I mean that has been my thing. I know when I was in law school, you know, this was already being discussed and these things were being put through. And I've got a paper somewhere that I wrote for a class on that that has to do with that. And I was not a fan of the FATF regulations and stuff coming in. You know, those kind of things coming in. Yeah, I don't like it at all. Want to become famous? Not on my stream. Bye-bye. All right. GT says, I hear Elliott wave can be a bit off depending on user. You know, it's like anything else, GT. You have to learn to do it correctly. Most people that you find online don't do it correctly. Period. End of sentence. Okay? You know, I've gone through the process. I've passed the level 1 exam for the CEWA, which is the Certified Elliott Wave Analyst designation. I haven't had the time to take the second test yet, which gives you the full designation. So there's that to think about. It doesn't mean that I'm going to be right with the counts all the time. Not at all. Nobody ever is. But it's Elliott wave is about understanding how to apply it. It's not saying, oh, you're going to be right every time or most of the time that you put your counts together. It's understanding how to apply it and then how to utilize proper risk management based on the rules and guidelines, as well as kind of understanding what the generally what you're going to expect to happen. So yeah. I think it's great for anybody to learn. It helps out a lot. But it's like anything else. You have to put in the time and effort to do it correctly. Wyckoff is exceedingly difficult for most people because they don't zoom in. Let me see here. So we'll look at the futures here for the DXY, right? The dollar futures here, because it gives us the volume. And so let me kind of zoom all this out here. Let me zoom out a bit. And so most people fail with Wyckoff because they do not understand how to properly read the volume and price action. They fail to recognize and really kind of accept that volume and price action is all relative. Okay, that's the biggest thing. They go, oh, well, look at the volume so much lower than here. How can it possibly do A, B, or C, right? But it's not, because you're not trying to compare this volume to this volume. Wyckoff is understanding where you are. First of all, it's understanding the price action and volume in a particular candle, and then where you should be comparing that with other price action and volume, with whatever area you are. And of course, you have the basic, like Elliott wave has. Okay, if it has basic structures. On your corrections, you can have an ABC, a zigzag or a triangle or a flat. And of the flat, there's three different kinds of flats you can have: a running, an extended, or expanded, or just a regular flat. Or you can have a running triangle, or a regular triangle, or So there's these structures that you have. Well, Wyckoff's the same way. There's a structure to your range, and so like Elliott wave, you have to understand that structure. But more importantly, you have to really understand that volume and price action relationship and what it means. So again. A lot of people do Wyckoff incorrectly because of that. A lot of people do Elliott wave incorrectly for the same reason. Not that the price action volume, but just that they don't understand how to apply it properly. They kind of half-ass their way through it. They don't have any real time practicing it. Practicing it correctly, guys. You can sit here and do something all day, every day. But if you're doing it wrong, all you're doing is enforcing in your head how to do it wrong. That doesn't get you points. You don't get to say, oh, I'm this trader, I'm this professional trader because I've been doing it for 3 years. Well, no, if you've been doing it for 3 years and you're still not consistently profitable, then you're still an amateur trader. And that's not a disrespectful comment. It's a recognition of what's going on. Well, I've been doing it every day for 3 years. Yeah, but you obviously, if you're not consistently profitable with it, you've obviously been doing it wrong. And so instead of getting upset when somebody like myself says that, you need to go, holy crud, maybe I've been doing it wrong. And figure out how to do it right and then practice doing it right. People are so gosh darn intent on saying, oh, well, I've been doing it this long, so I know what I'm talking about. No, you don't. And all you're doing is lying to yourself. And if you really have the desire to be a successful trader, you should understand that, go, holy crap, I need to do something different. I need to do it the correct way. I had some members pick up, because I just mentioned on Twitter that, I hated the moniker paid group, right? And so that label. And people have been saying about TWC, since we started, because that's all they're used to online, right? Everybody's got a paid group, a signals group, right? And I just kind of mentioned out there, you know what, man, I hate that. It makes me cringe. I hate the idea that people would actually consider us to be that, because we are so much more, right? It's all about education, understanding. And I had some great comments to that. And one person actually said, TWC is not a signals group. It's a trader's college. And I like that, because that really signals what I'm trying to do. What I'm trying to do here. And it's why we continue to change up what we do and how we do it. And we provide more and more education. It's trying to help you guys get in there and learn how to trade. But again, remember, the number one thing is discipline. And if you don't have discipline, it doesn't matter what I try and teach you. You're not going to do well with it. Luckily, you can choose to have discipline. You can choose to practice discipline. And it does take practice. And if you can do that, not just with trading, but everything else in your life becomes, exponentially easier. We don't realize how much we aren't disciplined in our real lives, guys. You may not really, we tend to lie to ourselves. Again, I always say this, we lie to ourselves about how good we are at something. We always make ourselves out to be a lot better than we are. And we minimize when we do something wrong, or how bad we are at something. It's never as bad as it seems, right? And I've been, again, I'm not perfect. I've noticed that in my own life. But that's where I can talk to you guys from a point of experience here and tell you, you absolutely have to figure that out. You do. Otherwise, you're just kind of really messing yourself up with that, right? Nobody wants to do that. So, yeah. Let me see here. Hank believes that trader SZ is the king of support and resistance or range trading. So if you know who that is, I guess you can follow them as well. Let me see here. Excuse me. You don't have to learn to use horizontal support and resistance levels before you learn EW. That's Hank's preference. Please understand that. You can learn Elliott Wave before you learn that. But again, as I told you, I think I said this last week or the last time on Tuesday, Elliott Wave is nothing more than this movement from support to resistance. That's what it is. And it works because people are not random. People tend to act and react in a specific way. Now, it doesn't mean they act the exact same way every time. But it means that in general, people will act this way and then that way and then this way and then that way. And that's why Elliott Wave works, guys. So yes, you can learn about support and resistances first, and it might help you out with Elliott Wave, but you definitely don't need to. Elliott Wave may help you if you listen to what I just said there. It may help you understand support and resistance, or better yet, supply and demand better. Really, price just moves between areas of liquidity, guys. Again, I keep telling you, trading is simple. It's not easy, but it can definitely be done. I'm here to, I do it. I'm here to tell you it can be done. Okay. Yeah. So, nobody wants to print Monet. That's been done. I don't know. Can I get a lot of money for a Monet? I'll print it. I'd rather not do it illegally though, and risk going to jail for it, right? So let's jump over here real quick, guys. By the way, the Dow making a new all-time high here. Let me kind of get this pulled up here. Where's the Dow? Where's the Dow? Got to find my Dow chart. Oh, let's see. All right. So the Dow, I'm looking at a possible... I had a triangle that ended a little bit earlier here yesterday, and I told Discord that if we continue to see further upside, I would probably have to extend it one more to get us a proper count going on here. And so now we're looking at this. We've got a little bit of bearish divergence here between, before this drop right here. Right now, it looks like we might have 1, 2, 3, 4, 5 up is a 1, ABC is a 2. And then 1, 2, 3, 4, 5 gives you 1. 2 is a flat. 3, 4. And, this could be 5 here. This could be 5. Or, it could be heading up here. Again, I'm just looking, usually when I do it, I'll pull my range, my fib levels there and kind of look at it from there. In this case, this target up here is 3. So I've got this one based here on this right here. As far as that 1618 extension there. If it is this right here, see here, it's right there. It's right there in that range. So this, again, could be a wave 5 complete here. If it is, the first pullback is usually the wave 4, the lesser degree. If it continues down from that, brings down here, that 38.2 will take you right here into this 1 hour demand structure right here. And that almost finds the wick there. So if this is done right here, if we get a rejection here at the R1 and it drops below it, we'll look for a target down here, probably around this 35, 120 area. And then we'll get wave 5 up. And if it does that, then wave 5 is going to find us a target up here of about 36,194. If we're still in progress here, then I'm going to look for this to continue to extend beyond here and reach at least that 35,908 level at least. If this is a 1-2, we could see this extend here potentially as high as 36,167. Wave 3 there. So that's how I would look at that as it continues up there. But nonetheless, all-time high, new all-time high. But this doesn't give us a whole lot of wave 5 left in it, right? So we'll see how it continues to play out here. This could just be wave 1 of 5. We're not going to know that until it completes wave 5 and pulls back, and we see how it pulls back and where does it go. Ultimately, we need to see a drop below this wave 4 here at this triangle. Termination point at 33,854 and 69 cents. Oops, I didn't change this yet. But it'll be that one right there where wave E ends. And we've got to see a drop down below that to signal that wave 5 is done, because wave 5 can't subdivide any further if it drops down below where it starts. So that's what we're kind of looking on that too. I love XO. You guys know that, Trader XO. Crypto ISO, I consider him a friend. I like his stuff as well. All different ways of looking at the markets, guys, proving that you can be successful, learning the different ways, that not one way is necessarily more, is necessarily better than another one. They all lead to the same general areas, guys. You just have to put in the time and effort to learn it correctly and then practice it correctly to do it. As long as you do that, choose whatever works for you. Some people, Elliott Wave makes a lot of sense. Other people, they're just like, what? I was actually like, what? When I first learned it. It took me a while to really connect with Elliott Wave. Wyckoff, I understood right away. Wyckoff was easy for me. Other people, they can't in their head get to that whole price action and volume relationship. It's okay. You don't have to know it. I think that if you understand, even if you have trouble with it, if you continue to work at it, I think you're going to get it at some point. I really do. And I think that no matter how you trade, understanding how to trade a naked chart with just price action and volume, I think it just adds so much to anything that you try and do, guys. All right? Let me go ahead and change this while I'm thinking about this here real quick. 33,854.69. And then that way our Discord members have the correct wave 4 swing low there that they're looking at. So yeah, that's what we're kind of looking at there. The NASDAQ, I think, is still tripping behind here. Let me see if it's done anything different since I posted this morning. Yeah, see, now I've drawn a Chuvashat fork on here, and it dropped through this second one here on a pretty large candle spread there, finding some at least temporary support here on the R1 pivot. Bearish divergence on the 1 hour leading to that drop. Rejected there at the R2 pivot. That's around the 85.4 retracement. So whereas the Dow has made a new high, we have not made a new high with the NASDAQ yet. Now, that doesn't mean that it can't. But as always, as something I talked about probably within the last year, often a sign of a top, of a major top, will be a divergence between indexes. So some will make a new high, others don't. So we'll have to see if we get this continued breakdown. The next goal here is to break down impulsively through this ascending channel EQ, and that'll give a target of the channel support, and that right now is the 1 hour pivot. Come Monday, the pivot's going to change. But that'll be our first clue that'll be our first target there. We want to see an impulsive breakdown through this ascending channel support to really start going, okay, I think, that top's looking pretty juicy that it's in there. Finally breaking through wave B down here at 14,441.60. We'll lock this in as 3 waves up. So if we reverse from here and drop on down, this is 3 waves. And that should keep this as a 1-2 here, with the top being back over here in September. Finally, if we look at the S&P E-minis here, guys, the other index that we follow here a few times a day, same kind of idea here. Now, here's the thing. This one's come close. Oh, wait, no, it broke out. It did do it, it looks like. 45.51.50? Ah, it does. So within an hour after or within that next hour after I posted this morning, we did get the breakout. And I warned that might happen because of the proximity to where we were. I had drawn a Chuvas shop fork on here as well. And as you can see, it was riding up it. Peaked out right above it. Pulled back. Found support in the R1. We'll see what goes on here. I'm going to have to change this count now, because this is going to be an ABC. This will be an ABC here. Actually, we might be able to have the same triangle here that we have on the other. So this might be wave 4 termination right here. And this will give us a 1 and a 2. And this will probably maybe be a 3 and a 4. Then we got a 5 still to go up. So a lot similar to that Dow one. And so what we're going to want to see, let me see here. I'm going to draw this channel in here. So that triangle, wave 4 triangle, would end right here. Kind of dropping back in there. See where that 1618 reaches here real quick. So see, we haven't even quite hit the 618 yet, so this might be it. A little bit short. This might finish up 1, 2, 3, 4. Could be 5 in that area to finish up wave 3. So I'll have to jump back to the drawing board there since we're almost out of time here. So if you're in Discord, guys, I'll be correcting this, for the update later today, and kind of giving us a better count coming off there. But I believe that we may have an ABC, 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 ABC. So A, B, C, D, E triangle for wave 4. Then wave 5 rallies from right about this 4273 area heading on up, and I'll get that clearer count put on there for you guys. At that point. So yeah, E-minis popping up, a new all-time high to go with the Dow, NASDAQ. Oh, by the way, that was the NASDAQ composite, not the NASDAQ 100, just so you can keep track of which NASDAQ index that is that I keep on there. And so we've got that coming in there. Let me see here. Let me see. Those of you that don't know, I have my first NFT. I didn't have to buy it. Well, I mean, I guess I might have bought it. It's the other side of the NFT. I know a lot of y'all are buying the JPEGs out here and excited about that. I've always told you I'm more excited for the possibilities of the NFT when it comes to higher end products and stuff like that. So, those of you were asking me about this when I bought it, I was wearing it. So I've got this Breitling watch here. It's like, I don't know, $3,500 or something like that. But anyway, I got an email the other day, and I had bought this back during the summer. I just got an email the other day, last week or something, I think it was, that said, hey, you can get an NFT for this. And it has, it proves, I guess, that I'm the owner. It has the registration stuff on there and everything as well. So I thought that was kind of cool. I have to admit, I thought it was kind of cool. I didn't actually have to pay to mint the NFT or anything like that. So I assumed that that's all. I haven't really done a big deep check on how it works with it, but I assume that's all in it, in the included in what I already paid for the watch. But anyway, I'm going to check my other stuff now and see if I got it there. But I just thought that was kind of funny. You guys know how I feel about NFTs and things about that. I'm still kind of iffy about them. But, again, it doesn't mean, anything. It just means that I don't know enough about them to be really, truly excited about them. What I do know about them, I like, again, in terms of things like this, that we can do that. So those of you who've been paying attention, you know that. And you might have got a chuckle out of me mentioning that I had that. I know some of our members did, because I posted there in our NFT channel. So, I do have one now. There you go. That's the only NFT I have, guys. Yeah, Aria 20 is the NFT chain for Breitling. Yeah, yeah. Can I check out .USDT? Let me see here. Yeah, I might have a second here real quick. Let's see here. Let's see here. So we've got our 1-2 here continuing up. I've got a wave 3 up here, minimum around $71 right now. I'm kind of looking this as a 1-2, 1-2. And so going off that 1-2, we've got one of 3 up here now in progress. So right now I've got this third wave target up there around $71 with this move right here. We're above that pivot. That's always a good thing. We came back and retested the support and breaking out. I'll be interested to see where the 4-hour pivots come in after the weekly close to see how they've adjusted. But yeah, I've got it still going up there overall. So we'll see. Locally, the count I have becomes invalidated if we drop. I mean, it really has to come down here below this right here, this swing low at 25.50. So there's a lot of wiggle room in here and whatnot. Again, I do think this may be a leading diagonal here. So it gets a 1, 2, 3, 4, and then that spike out there for 5. But it doesn't really pull back a whole lot. Just kind of find support here at this previous resistance. So as this continues to move out here, I may have to update the count a bit. But for right now, it works with what we're looking at there. So yeah. Let me see here. Oh yeah, the social media SPAC for Trump. That thing's got some attention. Netflix, if you guys were paying attention to the weekly breakout this week, I told you to watch earnings for Netflix and Tesla. Those are coming out this week. So hopefully you enjoyed that, and maybe you've done something well with that. Let me see here. Yeah, I think we've got that. Oh, I see somebody just in time talking about Trump's version of Facebook, partnering with DWAC. Yeah, you guys have heard about, what about Facebook, right? Going to change their name. I think, again, we've talked about this whole metaverse thing in Facebook. I think we've talked about it before. With how they bought Oculus and how that was looking to be the lead into this whole kind of universe thing, because now if you get an Oculus, you have to have a Facebook account to use it. I bought Oculus before Facebook had it, and then I got really irritated when I had to have a Facebook account to use it. But anyway, yeah, this going in there, I think they're building this whole kind of metaverse thing, going back from that, like I talked about back when that happened. And so now they're changing their name. I don't know. Facebook's got a lot of, Facebook is old. The name is old. People kind of lump it in with the old school social media platforms. So part of this is a refresher on the name, on the logo and everything. Maybe try to get people to be more interested in it again, make it relevant. I can't say it's not relevant. There's a lot of users, but nonetheless, we all remember what happened with MySpace, right? Robert Murdoch and them bought it at its height and then sold it for a significant loss because that thing just kept tanking after that. Anybody still friends with Tom on MySpace? Anybody still have a MySpace? Anyway, Facebook trying to hopefully not become the next MySpace. So we'll see how it is, right? Yeah, it's going to be crazy. So it'll be all interesting, guys. Lots of new stuff coming in. The world is definitely getting more and more online. So I don't know. My son's growing up in this. He's only 10 and a half, a little bit over 10 and a half. So he hasn't known anything but, this whole online thing, whatever. Even though he doesn't have social media accounts or anything, he knows about them. He knows about Google and YouTube and stuff like that. So, he's never known a life without that. So it's going to be interesting helping him navigate as he grows up. So anyway, guys, it's 1 o'clock, so I need to get out of here. I hope you've taken something away today. Something that I've talked about in terms of being a better trader, or especially about just being a better human being, man. At the end of the day, it's all we have. All we have is our character, that which makes us what we are. I don't believe that adversity creates character. I believe it reveals character. We are who we are, period. We often kind of don't show it. And I think the world needs a lot more of people going out there and showing it in a good way, showing good character, showing kindness. I really think that we need that. And, I do what I do here with TWC and what I do here, live streams and everything. But it's always out of that ends. And it doesn't have to be good to be altruistic good. It just has to be good. In other words, you're doing things to help people out in some way. Even if it's just because doing so makes you feel better. That's okay. Because guess what? The fact that you did it, you helped somebody out, helped them out, period. Stop thinking altruism is this end-all, be-all. And that if you're not altruistic, which I honestly don't believe exists, but people believe it does, and they think that's the only way you can actually be good. It's nonsense, guys. Do what you want to do for you, but make sure, if you can, make sure it helps people. I will never fault anybody for getting out there and making some money while they're helping people, because at the end of the day, they're helping people, period. And they wouldn't be doing it otherwise, right? That's okay. The net benefit is help. The net benefit is good. So, there you go. As always, guys, remember, the only thing you control in the market is how much you lose. That's it. So if you haven't taken anything else away from this, which hopefully you have, but if you haven't, make sure that you do take away the fact that risk management is the most important thing you're ever going to do as a trader, day in and day out. Okay? Make sure you understand that. Risk management. There you go. Y'all have a great day. Take care. We'd love to see you at howtotradetowin.com. Use the coupon there code at the beginning. If you don't know what that is, you came in a little bit later, you're just kind of bouncing around the video. Scroll back to the beginning there and use that coupon code I gave there. You can get 50% off Tier 3. Otherwise, enter, and even if you do, man, enter our giveaway there. Got lots of stuff to give away. We gave away things last week, memberships and whatnot. We're going to do that again this week in a PS5 there as well. And we're going to continue doing this every week into December. So, again, take your chance. It doesn't take a whole lot for you to do. We provide a lot of great free content. So, there you go. Thanks, guys. I really appreciate y'all. Have a great weekend, and we'll see you there on Tuesday, 11 a.m. Central Standard Time. Take care.